I joined Russell back in '96, and then in 2007 I was tapped on the shoulder to go over to the US.
And you're in Sydney, sort of, yeah?
I was in Sydney running investments for the region, and someone tapped me on the shoulder, the CEO, and said, would you like to come across to the US and run investments for Russell globally? And I jumped at the opportunity. Right. That was 2007 though.
Okay, so let's get this in perspective, run investments for Russell globally. What does that actually mean?
Right, so what that means is we run about $284 billion and we trade about $2 trillion a year, and the team that did that was part of my world.
Right, and so that was your day-to-day life, was trading. So that, what was it? You had 280 billion invested.
That's right.
And trading 300...
2 trillion, so $2,000 billion a year.
Right, and so how does that affect your head, I suppose? I mean, is there a point where you sort of go to bed and lie there and go, wow, today I did, or is it just that in the end they're just numbers?
You'd have to ask my wife how it affected my head. Look, I mean, at the end of the day, it was a huge honour, I guess, to be entrusted with that much money. I mean, we had do have a really solid team. So, I mean, we definitely sweated the markets, particularly through 2008. Yeah. But at the end of the day, it was a job, and I guess to a degree, it's just big numbers.
Okay, but there couldn't have been, historically there could have been, but in the last 15, 20 years, there couldn't have been a worse time to be you, could there, in that job?
Yes, I mean, that's probably right. I mean, certainly when I turned up in the role in January 2008, none of us, I think, had any idea that Bear Stearns would go under in April and Lehman would go under in September, and then the markets would basically go into meltdown. Okay,
so what was that actually like to be in the middle of? And you were in Seattle too, weren't you?
That was an interesting experience. That's sort of a Chinese curse, I guess. Look, I mean, it was surreal, to be honest, at one stage, because the markets froze and the sort of things that you thought would be really liquid and you were able to trade, like cash and bonds, you couldn't. So markets sort of felt as though they were turned upside down, and clearly there was a lot of volatility. A lot of our clients were experiencing a lot of angst. And it really was a difficult time. And one of the things that I'll talk about tomorrow is not panicking, and that was a classic opportunity to not panic.
Okay, so how do you not panic?
So the way that we thought about it was we looked back at long-term fundamentals. We looked at where we were currently positioned, and we looked at what other people were doing in the market, and we tried as best we could to, first of all, keep our clients invested and not capitulating, and then secondly, taking advantage of some of the opportunities that arose. And as we've seen over the last 5 years, there are a lot of opportunities back there. You just needed a lot of fortitude to be able to take those positions.
How hard was it with your clients to actually keep them invested, you know, and keep them even vaguely buoyant?
Right, so it was really very difficult, and it wasn't just the responsibility, obviously, of the investment team. It was a responsibility of our client portfolio managers and the people dealing with the institutions and the retail advisors that we were talking to. So, I mean, it was difficult, but for those that stayed the course, they were pretty happy about it 3 to 5 years later on down the track.
Obviously. And so what about now? You've come back, you're back in Sydney, you've been back for 6 months or?
Just almost 6 months.
Okay. Well, what's our future? I mean, you've been away, you've had a look at the big wide world of investment. Do you come back and say Australia's a small place, or, I mean, like with all due, you understand,
Sure.
I don't mean that in a disrespectful way.
Right, so, I mean, it's a completely different role now. So, I mean, that was running the investment team. This is
that would have been
running
exciting though,
which
right?
was very exciting. And this is running a business. So we've got some great opportunities in Australia. I think the difference now is a lot of the low-hanging fruit in investment markets has actually been had. So that happened back in late 2008, 2009. So the real issue, I guess, that advisors and their clients are looking at now is where to put the money. It's not like equities anywhere in the world are screamingly good value. Interest rates are really low, so that's providing a bit of a quandary.
Okay, so someone comes to you and this must happen to you if you are bold enough to say what you do for a living, and says, I've got this much money to spend, where would you put it? What would I do with it? Where are Russell suggesting that the course might be at the moment?
Right, so generally when someone comes to you and you're having a beer or over a barbecue or a dinner party, they probably have different expectations than maybe are actually reasonable or realistic. But I mean, bottom line, I guess the first question you ask is, well, what is the investment outcome that you want? And it can't be, well, I want to double money in the next 12 months.
Right.
So it's got to be realistic. And then once we've had a conversation about what the investment outcome is that they're looking to achieve, then we typically come up with some sort of multi-asset portfolio, so diversified across a range of assets that on the balance of probability is more likely, not guaranteed, to hit a particular investment outcome, and perhaps as importantly with the sort of levels of risk that they can actually afford to take.
Okay, so part of the thing is with investors is helping them understand what they're actually wanting as opposed to saying, I can give you this and this and this.
Yeah, I mean, I think at the moment, part of the deal would be just coming up with a realistic investment outcome, whether it's accumulation or some sort of income stream, and then once you've actually ascertained pretty precisely what that level is, then going about and coming up with the solution. In our case, I mean, most of the 284 billion that we run for institutions and retail around the world is in those sort of solutions.
Okay.
Diversified.
All right, Peter. Well, welcome back.
Thank you.
Good to have you back in Australia.